The Schwab U.S. Dividend Equity ETF, SCHD, is a passively managed exchange-traded fund, ETF, that tracks the Dow Jones U.S. Dividend 100 Index. This index is made up of 100 large-cap U.S. companies that have increased their dividends for at least 25 consecutive years. SCHD is a popular choice for investors who are looking to build long-term wealth through dividend investing. The ETF has a number of features that make it a good choice for this purpose. It invests in a diversified basket of high-quality companies. It has a low expense ratio. It has a strong track record of performance. It pays regular dividends. How SCHD can make you a future millionaire. There are a few ways that SCHD can help you become a future millionaire. One way is to simply invest in SCHD and hold it for the long term. Over time, the ETF's dividend payments and capital appreciation will help to grow your investment. For example, let's say you invest $10,000 in SCHD. If the ETF generates a 10% annual total return, your investment will be worth over $100,000 in 10 years and over $1 million in 30 years. Another way to use SCHD to become a millionaire is to reinvest your dividends. This means that instead of taking your dividends out in cash, you use them to buy more shares of SCHD. Over time, this can lead to a significant increase in the size of your portfolio. For example, let's say you invest $10,000 in SCHD and reinvest your dividends. If the ETF generates a 10% annual total return, your investment will be worth over $200,000 in 10 years and over $2 million in 30 years. Finally, you can also use SCHD to become a millionaire by dollar-cost averaging. Dollar-cost averaging is a strategy where you invest a fixed amount of money in an asset on a regular basis, regardless of the price. This strategy can help you to reduce your overall risk and maximize your returns over time. For example, let's say you invest $200 in SCHD each month. If the ETF generates a 10% annual total return, your investment will be worth over $100,000 in 10 years and over $1 million in 30 years. Benefits of investing in SCHD. There are a number of benefits to investing in SCHD, including diversification. SCHD invests in a diversified basket of 100 large-cap U.S. companies. This diversification helps to reduce risk and maximize potential returns. Quality. SCHD invests in companies that have a track record of increasing their dividends for at least 25 consecutive years. This suggests that these companies are well established and profitable, and that they are committed to returning capital to their shareholders. Low expense ratio. SCHD's expense ratio is just 0.06%. This means that investors keep more of their returns. Strong track record. SCHD has outperformed the S&P 500 index over the past 5 and 10 years. Regular dividends. SCHD pays quarterly dividends to shareholders. This provides investors with a regular stream of income. Risks of investing in SCHD. While SCHD is a good investment for many investors, there are a few risks to be aware of. Market risk. Like any investment, SCHD is subject to market risk. This means that the value of your investment can go down as well as up. Interest rate risk. SCHD is also subject to interest rate risk. This means that the value of your investment could go down if interest rates rise. Dividend risk. There is also a risk that companies in SCHD could cut their dividends. However, this risk is mitigated by the fact that SCHD invests in companies with a long track record of increasing their dividends. Overall, SCHD is a good investment for investors who are looking to build long-term wealth through dividend investing. The ETF has a number of features that make it a good choice for this purpose, including its diversification, quality, low expense ratio, strong track record, and regular dividends.